interactive with X-Ray, where we bring trading experts to you live in the platform. Choose sessions, watch live market analysis, and catch up on your favorite market insights anytime. Ask questions and go one-to-one with leading experts on gold, oil, FX, crypto, indices, and equities. X-Ray, your very own analysis team, right at your fingertips. That's higher trading from MarketsX. Discover how some of the top executives are trading their own companies with our Insider Trades tool. See who's been buying or selling stock and what their trades say about insider sentiment. Use this unique big data tool to make more informed stock trades. That's higher trading from MarketsX.
What's happening, people? How are you guys doing? Let me know how you're doing in the comments box below. Today I want to talk to you about the Forex terminology, guys. All those fancy words that you might have heard of, but you have no idea what they mean. But first, for the ones of you that don't know me yet, my name is Andrew, and for the last 10 years, I worked in many retail and institutional Forex brokerages in Europe. Join me in this amazing journey and find out the secret corners of Forex trading from top industry specialists. Learn what most Forex brokers don't want you to know by watching our daily broadcast, guys. And if you like what you see, then like, share, subscribe, and support us in delivering more great content. I'll give you exactly 30 seconds to absolutely smash that subscribe button, and then we get started. Come on, smash that subscribe button, guys. Don't be haters. It's only Tuesday. All right, Forex terminology explained. Coming up. Right, and here we are, beautiful people, with the Forex terminology, which I will explain to you today. Obviously, the Forex trading industry is huge, and it has a lot of words, a lot of tricky words, a lot of terminology used. But today, I'm going to try and highlight the most important ones. So we have quite a few slides today. So let's get started, guys. Let's get down to business and see what is the first word that traders hear after the deposit, of course. Spread. What is the spread, guys? This is a widely asked question. What is the spread? In layman terms, the spread is the commission that the broker is charging you whenever you open a position. In other words, the spread is the difference between buy price and the sell price. Okay, that is what the spread is. The tiny, tiny commission the trader pays every time he opens a trade. Okay, this can be translated either as commission that the broker is charging or the difference between the buy and the sell. What's worth noting, guys, is that all asset classes, all the assets have different spreads, different commissions. So make sure you know the difference between major currency pairs, minor currency pairs, and exotics before you start trading. Check the spreads, guys, to see exactly how much money you're going to be paying for opening a position. Let's move on to the number 2, guys, which is as important as number 1, guys, if not more important. Leverage. This is another word you're going to hear very, very often. What is the leverage, guys? Leverage is basically that tool that allows you to deposit very little money and control a very big position on the market. Okay, this is what leverage is. Leverage is a double-edged sword, guys. It can send you into profits very, very fast, or it could completely work against you, sending you into losses very, very fast. If you don't know how to use leverage properly, guys, very likely you're going to have a bit more losing trades than winning trades. This is it. This is what the leverage is that tool that makes the difference between the CFDs market and the physical market. Okay, on the physical market, as a retail trader, you don't really have leverage. Or if you're going to have leverage, you're going to have a leverage of 1 to 2 or 1 to 3. If you're trading the CFDs market, you can have a leverage anywhere between 1 to 30, which is the common leverage in the European Union, up to 1 to 400, guys. Okay, which is usually the leverage that you see in offshore regulated brokerages. Now, you have to know what it is and how to use it, okay? Because it can help you a lot, but it's very dangerous in the same time. Okay, so this is the number 2 most important word in the forex trading terminology, the leverage, guys. In a short sentence, if your leverage is 1 to 30, it means basically you have to invest 30 times less to open that position. So the higher the leverage, the less money you're going to have to put in as collateral. The risk is if you're only putting in as collateral 2 or 3 or 5% of whatever that trade value is, what do you do when the trade goes against you for 1 or 2%? You're going to risk to get wiped out. So this is the downside of using leverage. But if you know how to use it correctly, guys, sky's the limit. Let's move on to number 3, guys, and see another very important word that most traders or some beginner traders have no idea what it means. The swap or the rollover, guys. What is the swap? Are you swapping anything? No, you're not. The swap is basically a fee that every trader pays that keeps positions open overnight, over midnight, okay? Or the fee that the trader pays when he's rolling over the trades from this day to the following day. This is it. Usually the swap is very, very tiny, guys. It's 0.3% or 0.03%, let's say, as an example, from the trade value. Okay, so you don't have to be worried about the swap too much. You see how it goes for a day or two, and maybe your brokerage will charge you a higher swap than usual. That doesn't necessarily mean it comes from the brokerage. It might come straight from the exchange, as your the asset that you're trading on, okay, is a bit more exotic. This is it, and the swap varies. Now, it's worth noting, guys, that you have 2 types of swaps. Okay, you have a positive swap when you're receiving money for keeping that position open overnight, and you have a negative swap when you're actually paying to keep that position open overnight. If you manage to catch a trade with a positive swap when you're actually receiving money and you're going with the trend, that's a win-win situation, guys. Now, let's move on to number 4, guys, and see what does long or short mean. You're going to hear this a lot in professional trading. Go long, go short. What does that mean? Well, to make your life easier, guys, I can tell you this. It's not related to the time frame. Okay? It's not a short time frame or a long time frame. A long or short basically means buy or sell. Okay, if you go long on the US dollar, it means you're opening a buy position on the US dollar. If you go short on the dollar, it means you're selling the US dollar. As easy as that. So basically, this is what long or short means. Moving on to number 5, guys. We have a bit more slides today, and now it gets a bit more complicated. What is the margin? Because you're trading margin. Okay, you're using margin to trade with. So I'll make your life easier. Replace the word margin with the word money. It's going to make your life much, much easier, and you're going to understand better what I'm talking about. So, available margin. Okay, what happens if we replace the word margin with the word money? It's simple, isn't it? Available funds. Initial margin. Basically, the funds you've invested to open that position. Okay, this is what the initial margin means. And then you have the maintenance margin. Okay, what does that mean? That collateral amount that you must have in your account to keep your position open at all times. Because once again, guys, remember, when you're trading margin products, when you're trading leverage products, you're only required to put down a small percentage as collateral for you to open a big trade. This is it. So the maintenance margin, is the funds that you've used the funds that you are required to have in your account at all times to keep your position open. It's not really complicated, is it? So whenever you come across margin, try and replace the word margin with the word money, and it's going to make much more sense. Now we're moving on to the slide number 6, guys. What is open P&L? P&L. You're going to hear this a lot. Open P&L means the sum of all trades open in a profit or loss. Okay? The profit or the loss only occurs on your trading account, on your balance, whenever you close a trade. Okay, while your trade is open, you can only see roughly what is going on with your trading account if you were to close all the trades right now. Okay, so the open P&L is the total of your trades in a profit or loss because you haven't closed them yet. This is it. Now, slide number 7, guys. What is your trade size? We have two types of traders. Traders that use the MetaTrader 4 or 5 platform, and then the traders that use a web-based platform, or the broker's platform. Now, what is the difference between these two platforms? There isn't much. The only difference will be the trade size, okay? On the MT4, you're using lots, guys, 1 lot, 0.1 lots, 0.01 lots, or 0.5 lots. You need to know what that means. While on the web trading platform, you're going to be using amounts. The amount of money you want to play with, let's say, you want to exchange. So 1 lot is the standard measurement unit in the Forex market, and 1 lot equals to 100,000. Either euros or dollars or British pounds or Swiss franc, it doesn't matter. 1 lot in that box between the buy and sell, guys, means you're executing a position that's worth 100,000, of whatever currency you're going to have in the left-hand side. Now, for 1 lot, you have 100,000, and the movement, your gain will be $10 per pip. What is the pip? You're going to see it in the next slide, guys. Okay, so if you're trading 1 lot, if you're trading a position of 100,000, you're going to be making $10 for every movement up or down of that currency. Okay, now if you have a leverage of 1 to 400, guys, okay, how much will it cost you to open 1 lot? It's very simple. You take the position size that you want to execute, which in our case will be 100,000. You divide it by the leverage, which is, again, in our case, 400, let's say, and you will get your initial margin. The funds you have to invest to open that position, to execute that position. I can tell you out front, in order for you to open a position of 100,000 units or 1 lot on a leverage of 1 to 400, you're going to need $250 just to open that position. And for every movement of that currency pair, you're going to be making or losing $10 per pip. Now, for the 0.1 lots, I think it's a bit clearer now. You're going to be executing $10,000 or euros, or pounds. You're only going to need $25 to execute that position if you have a leverage of 1 to 400. Okay, and you will be making $1 for every single movement of that currency. And the last but not the least, guys, the 001 lots or 1,000 units, dollars, euros, or British pound traded will give you a pip value of only 10 cents per pip. So this means you're going to have to keep your trades open for a longer period of time to catch a bigger movement, okay, for you to actually make a bit of profit. If you're trading the smallest position ever, which is 001 lots or 1,000 units on the web trading platforms, guys, you're only going to be making 10 cents per pip. Okay, so with a bit of luck, on an average day, you might be making $1 or $2 or $3. Okay, you can't even buy a Happy Meal with that amount. Okay, but it's good for you to get a bit of experience, to generate a bit of track record on your account. To get the feel that you get when you're playing with real money, even though it's just a 001 position, or only 1,000 units, which, by the way, after the leverage, okay, on a leverage of 1 to 400, let's say, you're only going to need $2.5, to open a position that's worth on the markets $1,000, guys. Okay? Right, this is how your trade size works. Okay, you need to know the amount you're going to type in your in the box between the buy and sell buttons. Okay, and know how much you're going to expose from your trading account. Because if it goes against you for a bit of time and you expose a bit too much, guys, you're going to be wiped out. Now, let's move on to what I think it is the last slide for today. What is the PIP, guys? A PIP, short for percentage in point or price interest point, represents a tiny measure of the exchange in a currency pair in the Forex market. Right, in this example, we have the most traded currency pair in the world, the Euro-US dollar. And we can see that the highlighted one is the 4th decimal. The 4th digit after the dot. That is the PIP, guys. Okay, so for every movement of the 4th digit after the dot, you're either making or losing money. As easy as that. Now, the last one, you might ask me, what's going on with the last one? Why isn't it the last one? That's called the pipette, which is a fraction of a pip. Okay, you don't care about the pipette. Your money is being made or lost on the pip movement, which is the 4th digit after the decimal, apart from the JPY. This is it, guys. This is it for today. If you want to find out more about trading cryptocurrencies, stocks, currency pairs, or commodities, feel free to contact us on instructfx.com, info@instructfx.com, or my direct email, guys, thechartwhisper@gmail.com. Now, we do encourage all traders to approach us if they have any questions, beginner or experienced traders, and we do provide them free mentoring for a limited amount of time. This is it, guys. Join me again tomorrow, same time, same place, for another great round of market talks. And don't go anywhere, guys. We're coming back live in 2 minutes with the U.S. markets opening. Great news today. Stay tuned. We're coming back live in a minute.
Go interactive with X-Ray, where we bring trading experts to you live in the platform. Choose sessions, watch live market analysis, and catch up on your favorite market insights anytime. Ask questions and go one-to-one with leading experts on gold, oil, FX, crypto, indices, and equities. X-Ray, your very own analysis team, right at your fingertips. That's higher trading from MarketsX. Discover how some of the top executives are trading their own companies with our Insider Trades tool. See who's been buying or selling stock and what their trades say about insider sentiment. Use this unique big data tool to make more informed stock trades. That's higher trading from MarketsX.
Boom, and we're live. What's happening, beautiful people? Good morning, America. Good afternoon, Europe, and welcome everyone to our live stream. How are you guys doing this afternoon? Let me know how you're doing in the comments box below, guys. Type your comments, interact with me, and I'll do my best to reply. Now, please remember to like, share, subscribe on our YouTube channel, guys, if you like what you see, and support us in delivering more great content. It does help us a lot, guys, and it's free. Don't be haters. Click that subscribe button. Type your comments, interact with us, and let us know how you're doing. Now, let's get down to business, guys, and see what is happening in the markets today, Tuesday, 2nd of February, 2021. U.S. indices are seen trading way higher today on positive earnings reports and optimism on the new stimulus bill. The earnings season continues today with Pfizer and ExxonMobil to report their numbers before the opening, and the giants Amazon and Alphabet after the closing. Tesla is under tremendous pressure by the U.S. auto regulators to recall 135,000 cars. The gross domestic product in the Eurozone disappoints, pushing the European currency to its lowest level so far this year. Crude oil gains ahead of API reports. Silver corrects on traders booking profits. And Bitcoin gains, guys, steady at $35,000 for today. U.S. trading session coming up. Right, once again, very good afternoon, everyone, and welcome to the U.S. trading session, guys. We are exactly 10 minutes ahead of the U.S. markets open for today, and I want to start with the hottest topic of the moment. GameStop, AMC, and Silver, guys. Let's see what's going on. GameStop, AMC slide as retail trading frenzy stalls. Okay, shares of video game retailer GameStop and movie theater operator AMC Entertainment lost 26% and 13% respectively in early pre-market trade today. A sharp rally in the stocks of companies at the heart of the battle between amateur investors and the Wall Street faltered in the previous session, partly as the action shifted to assets including silver. Right. So obviously, like any other asset that is inflated artificially, guys, we're going to see a meltdown. We're going to see a slide. We're going to see a massive correction. Okay. Now, This is what traders call a potential pump and dump, guys. When a bunch of traders, when a group of traders is artificially inflating the price of a stock, let's say, or a commodity or an asset, and then they close their positions, cashing the profits. This is what a pump and dump is, basically. And everything happens in a very short time, and people that don't know what a pump and dump is or what to look for will be exposed to losses, because people without the experience, will be told, look at GameStop stocks, look at AMC, look at Silver. It went up 300% in one day. Now is the time to buy. And you buy. And what happens on the other side? The traders that already bought, guys, are already closing their buy positions to cash in the profits, creating this meltdown. And you're going to be left all alone, with another group of buyers, let's say, all alone somewhere, in the ether, somewhere up there. And the price keeps going down. So this is what a pump and dump is. Very, very careful. You need to know what this is in case this happens again. Now, let's have a quick look at the economic calendar for today, guys, and see what is happening in the economic calendar. There we go. We had quite a few announcements. We started the day nice and early, guys, with an interest rate decision from the Aussie dollar, basically, which was kept unchanged at a positive 0.1% as expected, followed by a Royal Bank of Australia rate statement. Now, at 9 o'clock GMT plus 2, guys, we started getting the announcements in the Eurozone, which the nationwide HPI month-to-month and year-over-year on the British pound coming out negative, coming out in red, way below what consensus was expected. And very, very likely that gave the British pound a bit of a push to the downside at the market's opening today. 45 minutes later, we had the French Consumer Price Index, guys, and the HICP, which both came out positive, a bit higher than what consensus was expecting. Both predictions for the Consumer Price Index were in the negative side, and they came out 0.2% on the positive, respectively 0.3%. We had the Spanish unemployment change, guys, which came out 76,000.2. No forecast on this one. And then we had the gross domestic product year over year and quarter over quarter in the Eurozone, guys, which, as expected, came out below expectations. Negative 5.1% versus a negative 4.3%, and negative 0.7% versus a positive 12.7% expected. Well, no doubt about it, we saw the euro tanking a bit today. Let's see what's going to happen in the US trading session, guys, and how low will the euro go. It already reached its lowest point for the year, for 2021. Right. Okay, now moving on. We're going to have a couple of FOMC members speaking at 2100 hours GMT plus 2, guys. And then just before midnight, we're going to have the API weekly crude oil stock. Let's remember, every Wednesday, guys, unless there's a public holiday, Monday or Tuesday, we're going to have the Cushing crude oil inventories and the oil inventories, the oil reports, announced on the markets, and potential big volatility for oil. Now, just before midnight, guys, we're going to have the employment change and the unemployment rate on the Kiwi dollar for the late night traders. If you're familiar with the situation in New Zealand, then you can have a go at the unemployment rate announcement or the employment change. Right, now we are still in the middle of the earnings season, guys. We're getting close to the end of the earnings season, but still we're going to have another 1 or 2 weeks to go. Right, we're going to have some big names reporting. We already saw 2 big names reporting, guys. We saw ExxonMobil reporting today, an increase of earnings per share of 0.03 cents. And a revenue of 46.54 billion versus a prediction of 45.97 billion. They seem to be doing all right. And they were in talks anyway of a potential merger, or purchasing something with Chevron we saw yesterday. We also had Pfizer, guys, the first company that issued the COVID-19 vaccine with earnings per share in the negative territory, 0.42% versus 0.51 expected. And the revenue, guys, so far is negative as well, 11.68 billion versus a forecast of 12.24 billion. To be honest, guys, if I'd had a revenue of 11.68 billion, I'd say I'm doing quite okay. I wouldn't qualify that as red. But let's see. Let's see. Very important. What statement followed after the earnings reports? Now, later on, after closing, guys, we're going to have Amazon reporting the biggest retailer ever, okay, which is expected to announce earnings per share of minimum $7.16 and a revenue forecast of 119.68 billion. Yeah, the market cap is $1.68 trillion, guys. Also, after the closing bell today, we're going to have Google announcing our Alphabet C and Alphabet A. Again, earnings per share reported above $15. Okay, 15.6 and 15.7 respectively, with a revenue forecast of 52.89 billion for both of them, and with a market cap of $1.29 trillion, guys. Wow, tremendous figures, amazing figures. Right, we also had UPS, guys, reporting better than expected, 266 a share versus an expectation of 214, and the revenue forecast of 22.87 billion, and it came out 24.90 billion. Well, no wonder with all this lockdown happening. We are also expecting British Petroleum to announce some figures. This is what's happening today. Quick look on what's happening tomorrow, guys. We're going to have PayPal reporting, the biggest name out there so far. We're going to have eBay reporting as well. GlaxoSmithKline, okay, Humana, and Qualcomm. Okay, this is what's expected to happen tomorrow. So we still have a bit to go. Now, let's have a quick look at some interesting articles, guys. We are 3-4 minutes ahead of the US opening. Let's see how the markets will open today. Now, I'm going to jump straight into it. Silver sinks as investor frenzy cools and Reddit backlash grows. Well, this is a pump and dump. This is what it looks like. Very big pump and dump. So, let's see what is happening. The buying frenzy that sends silver futures to an 8-year high is showing signs of stalling. Well, duh. You can't really compete with the big boys, even if you're a wealthy retail trader. Silver in London and New York dropped more than 5% after CME Group hiked margin requirements for futures, while a backlash against the precious metal gained momentum among posters on the now famous Reddit board that kicked off turmoil in the market last week. Now, many of you guys that are trading probably got a lot of emails by now from your brokerage that they're changing the margin requirements on silver. Okay, and you can see the reason why. The big exchanges, guys, also changed the margin requirements on silver. Now, backwardation, a sign of tightness, is easing in the futures market. And at least one European coin dealer said demand was getting back to normal after a buying surge that overwhelmed retail websites across the globe over the weekend. Analysts from HSBC to Commerzbank had warned the rally would be hard to sustain, and it was. Right, the silver markets was rolled in the past week after a series of quotes on the Wall Street Bets Forum calling for a short squeeze. BlackRock's iShares Silver Trust had a combined net inflow of $1.5 billion on Friday and Monday. Silver options trading surged and prices swung dramatically before spiking to the highest since 2013. Wow. Silver miners were caught up to with Canada First Majestic Silver Corporation rising as much as 43% yesterday. But as prices pull back, it remains unclear who authored the posts that ignited the huge run-up or who exactly was behind the trading. Money managers have had a net long position on the metal since mid-2019, making it unlikely that retail investors could accomplish the kind of result they've produced so dramatically in stocks like GameStop. Now, on the Wall Street board, sentiment was turned decidedly against silver. Users are speculating supporting the post may be part of a pump and dump. There we go, guys. And I promise you, I did not read this article before it was made public, or that hedge funds may have infiltrated the board. Right, guys. We're talking about hedge funds. We're talking about the market movers. We're talking about the richest companies out there. Okay, it's very unlikely that a number of retail traders, even if rich, let's say, has the physical capacity of moving the markets every single day. Okay, that's hard to believe. I still find it hard to believe. So this explains it. Yeah, it was all a pump and dump scheme, and now it's probably coming to surface. Now, right. Let's move on. I don't want to bore you to death with this one. We have other news to talk about, guys. So, spot silver dropped 5% to 27.59 an ounce at 11:39 a.m. in London. Gold and platinum also fell, while palladium rose once again. The Bloomberg Dollar Spot Index was little change. Right, this is what is happening. So I can close this tab. Now, let's have a look at Tesla, guys, and see why is Tesla under so much pressure right now. Tesla has agreed to recall 134,951 Model S and Model X vehicles with touchscreen displays that could fail after U.S. auto safety regulators sought the recall last month, according to a recall posted on a government website today. The National Highway Traffic Safety Administration made the unusual recall request in a formal January 13 letter to Tesla, saying it had tentatively concluded that 2012, 2018 Model S and 2016, 2018 Model X vehicles pose a safety issue. The agency said the touchscreen failures pose significant safety issues, including the loss of rear-view backup camera images and windshield defogging and defrosting systems that may decrease the driver's visibility in inclement weather. Really, I mean, come on. We have other European cars that do this by default, because they're very cheap and very poorly built, and we don't see them being recalled like that. Now, if you would have an issue with the braking system, with the light system, with the wipers, okay, then that's a valid recall. But just because some touchscreen buttons don't work, I don't see it as a safety issue. It is a hazard. Yeah, it is a hazard, especially if you're buying a brand spanking new car. Okay, and it's not an average car. It's a Tesla, and you're spending a small fortune on it, and then you decide that the buttons don't work. I would be fuming. So, well done for the National Highway Traffic Safety Administration for doing this. But come on, guys, I think we're inflating it a bit too much. Okay. But well done overall. So we're closing another pop-up, guys, another window. Now let's see what is happening with the markets, guys. We should be in the U.S. trading session already. Okay, 2 minutes now. So U.S. stocks are seen trading sharply higher today, continuing the positive tone from the previous session amid growing optimism based on progress towards a stimulus package and strong corporate earnings. At 7:05 a.m. Eastern Time, the Dow futures were up 223 points. S&P traded 29 points higher, and the Nasdaq 100 futures climbed 97 points or 0.7%. All right. Now, President Joe Biden, the new U.S. President Joe Biden, met with a group of Republican senators late Monday in an attempt to get bipartisan support for a COVID relief plan amid opposition over the size of his proposed $1.9 trillion package. That said, top Democrats also filed a $1.9 trillion budget measure in a step towards bypassing Republicans so that funds can still be raised even if their support doesn't materialize in Congress. Also helping the tone has been signs that the recent retail-driven market frenzy may be settling down. Shares in GameStop, the stock that at the heart of last week's protest, are failing in pre-market trading today. Similarly, silver, which saw heavy buying on Monday, has dropped over 2% so far today. The earnings season continues with numbers due from leading pharmaceutical Pfizer and major oil ExxonMobil before the bell, and tech giants Amazon and Alphabet after the close. This is it. This fourth quarter of earnings is shaping up to be one of the strongest on record. Overall, 37% of the companies in the S&P 500 have reported results, with about 82% reporting earnings per share above estimates, which is above the 5-year average of 74%, according to FactSet. Now, let's have a quick look at some stocks, guys, and then we're going to move on to the charts of the day and the signals of the day. So, GameStop stock fell 40%, guys. AMC Entertainment dropped 31%, and BlackBerry fell 8.6%, weakening as the speculative trade that prompted the sharp gains in these stocks, among others, unwinds. Alphabet stock rose 1.3% after its Google unit agreed to spend 3.8 million, including 2.6 million in back pay to settle allegations that it underpaid women and unfairly passed over women and Asians for job openings. What on earth is going on? But anyway, moving on. The company's fourth quarter results are due after the close. Pfizer rose 0.6% after the pharma giant. This is what's happening when your brain works faster than your mouth. The pharma giant forecasts sales of about 15 billion from its COVID vaccine made with German partner BioNTech. And total 2021 revenue of between 59 and 61 billion dollars. Guys, okay. Right, Tesla rose 0.6% pre-market despite the electric car maker agreeing to recall almost 135 Model S and Model X vehicles to fix faulty touchscreen. All right, ExxonMobil stock rose 2% after the oil major beat earnings in the fourth quarter, although revenue came in below expectations. The company maintained its quarterly dividend, but to do so now sees its 2021 capital program at 16 to 19 billion, down from the 2020 target of 23 billion. British Petroleum ADR fell 4.2% after the UK-based oil giant reported 5.7 billion loss last year, its first in a decade. Right, okay, UPS rose 4.5% and Harley-Davidson fell 4% after the motorcycle manufacturer reported a loss in the fourth quarter, with 2020 total shipments hitting their lowest in more than 20 years. Well, it was kind of predicted. Now, let's do this, guys. Let me take a 30-second break. And then we're coming back live with the charts of the day and the signals of the day. This 30-second break should be enough for you to either type your comments and let me know how you're doing and if you're struggling with anything, or smash that subscribe button, guys. We're coming back live in 30 seconds with the charts of the day. Stay tuned.
Keep your finger on the market pulse with the News Alerts tool. Stay up to date on the latest sentiment across all the major asset classes. Uncover bullish or bearish signals tied to specific assets that could be developing before major price moves, and track how news sentiment correlated with price in the past. Track the news volume on an asset, its fear index, and get a better feel for its underlying strength. All with News Alerts, your central hub for market information. That's higher trading from MarketsX.
Right, beautiful people, and we're back, and today we're not gonna start with oil as usual. We're gonna start with GameStop Corporation, which opened to the downside today. Wow, amazing gap to the downside. Okay, $97.30 after this pump and dump, guys, as the 200 moving average indicates, and $130.25 this afternoon at the opening. Considering yesterday, guys, it closed somewhere around the $220 mark. Opening today at half than that, almost 50% lower, is huge, guys. This is what is happening with a pump and dump. Yeah, with an hyperinflated asset, okay, that doesn't have strong fundamentals. Let's have a quick look at AMC Entertainment as well. There we go. Again, on a 60-minute chart. There we go, guys. This is very, very similar to what we saw a minute ago. $8, only $8.25 after the US Open today. Okay, heading towards that 200 moving average to the downside at 557. But this is after the stock price went as high as $20.29. Okay, this is what is happening with the pumps and dumps, guys. And if you're caught somewhere up there with long positions, guys, don't be surprised if you're going to blow up a trading account in only 2 days. Now, let's have a quick look and have a look at the charts, guys. We're starting with crude oil WTI now, $55.02 for crude oil WTI this afternoon. Okay, with a tremendous rally in the last 24 hours. Okay, crude oil price jumped from 52.56 all the way up to 55.02, which is a movement of about $2.50. What's going to happen from now on? Only God knows. We see the RSI and the stochastic at the bottom, way into the overbought levels. So, guys, you might want to expect a bit of a pullback if if that's the case. Now we're moving on to the euro US dollar, which is accelerating the downtrend, guys. It dropped even lower today, breaking this important support level that we had at 120.61 and trading as low as 120.29 as things stand right now. Obviously, the RSI and the stochastic are way into the oversold levels, indicating even more potential downtrend from the European currency versus the US dollar. On the other hand, guys, we're looking at the pound, which is tanking as well. 136.29 for the pound this afternoon. Again, big drop in the pound in the last 12 hours or so. Okay, for the ones of you that shorted the pound, guys, well done. For the ones of you that shorted the euro, well done. It was quite obvious. Now, USD JPY, on the other hand, is strengthening, breaking the 105 mark, 105.11 for the USD JPY this afternoon, with the RSI stochastic pointing upwards and showing us more signs of buying power on the US dollar. On the other hand, the Aussie dollar, just like the European currencies, guys, took a beating, 0.7586 for the Aussie dollar this afternoon. Great potential to the downside for the Aussie dollar, and probably traders will set their take profit levels to 0.7522, as the first take profit. Now, moving on, USD CAD, again, we see the US dollar retesting that 200 moving average to the downside some point during the day today, early in the morning, and it bounced off it, currently trading at 128.51 again, and testing the highs. It is currently testing the highs. If it's going to manage to break those highs, guys, probably the 128.50, 129 will be your next level. Okay, there it is. 129.40, somewhere there will be your next take profit level to the upside. Right, let's see what's going on with the opening on the S&P and the Dow Jones today. Wow, what a nice opening this afternoon, guys. Big gap at the opening. 3,817.05 for the S&P 500, which is advancing to the upside, aiming for that 3,866.19, which was the previous high. I believe the Dow Jones, had a positive opening as well. What a nice positive opening for the Dow, guys. 30,557.81 for the Dow Jones as things stand right now. Again, it's testing that 200 MA right now. If we're going to see it pushing through that 200 MA, guys, then expect the markets to go back up at 31,263, as that's the previous high. Let's see. We see a dead cross being formed here. If the Dow does not manage to settle above that 200 moving average today, guys, then who knows? We might see a continuation. We might see a bit of a downtrend. Right, quick look at some stocks, guys. Apple opened to the downside today. Amazon opened to the upside, just like the Dow Jones and the S&P 500. It is currently retracting a bit, so keep an eye on this price. On a 3,347, as it might go back down to close the gap, and from there on, it might go even higher. Nvidia opened to the upside, guys. $539 for Nvidia this afternoon. Keep an eye on that top at 533. The US dollar index again is pushing higher, 91,235 for the US dollar index. And gold futures are being pushed lower, below the 1,850 level that we got used to by now. Right, light crude, guys. Brent oil futures again advanced on the European trading session today. 57.74 for crude oil. RSI stochastic way up into the overbought levels. Let's see what's going to happen. We might see a bit of a retest of that 20 MA to the downside after such an impressive rally. Silver futures, guys, are trading to the downside, obviously, at $27.24 for silver futures, with a potential retest of that 26.80, where that 200 moving average is on the charts. RSI stochastic are way into the oversold levels. However, after this big rally, don't be surprised if you're going to see silver coming back to normal, which is somewhere around 25.9 and 26. 26.80, 26.50, somewhere in that region. Right, Tesla opened to the upside so far. $864 for Tesla. Let's see if traders will digest this news. what action will they take on Tesla. And now Bitcoin, guys, the good almighty Bitcoin that was a bit inflated a couple of days ago by Elon Musk's comments. Okay, $34,888 this afternoon for Bitcoin versus the US dollar. Still trading quite steady in the 35,000 mark. It moved a bit higher. Now, let's see, where do we take it from here? Overall, we're looking at lower lows, guys. Okay, lower lows usually indicate a bit of a downtrend. Let's see what's going to happen with Bitcoin from here. Ethereum is doing very, very well. 1,427 for Ethereum. And now I'm wondering why on earth I didn't buy a bit more Ethereum when I had the chance a few days ago. But there you go. Right, overall uptrend for Ethereum. It seems to be settling somewhere there, somewhere in the higher 1,400. Okay, we might see another rally. We might see it aiming for the 1480 and why not the 1500 mark. Right, now let's have a look at some signals, guys. Let's see how investing.com sees it today. We are already 15-20 minutes almost into the US trading session, so the influx of orders should have steadied by now. All red for the euro and the pound this afternoon, guys, with strong sell indications. USD JPY, USD CHF, all green. It's supposed to strengthen today for strong buy indications. Aussie dollar, just like the European currencies, tanking with all red on the charts with strong sell. All right, the euro is supposed to strengthen versus the pound on through the eyes of investing.com. USD CAD has 4 green today, strong buy for USD CAD. The Kiwi dollar is weakening, okay, with strong sell indications, and the pound, guys, seems to be weakening versus the Japanese yen and the Swiss franc, once again with strong sell indications from investing.com. Mind you, the daily remains a strong buy, so careful with that one. It might be dragging for only a couple of hours. Now, let's have a quick look at commodities, guys. See what is happening with gold and silver, once again, through the eyes of investing.com. Right, strong sell indication for gold and silver this afternoon, guys, from investing.com. Copper has 4 red as well. Okay, and crude oil, WTI, and Brent oil both have strong buy indications on 15 minutes, hourly, and daily. Natural gas opened to the downside today with strong sell and sell indications on a 5 minutes and 15 minutes. And US wheat is dropping again, guys, with strong sell positions indicated by investing.com. Now, let's have a quick look at the US indices, guys. Let's see what is happening. This is what we like to see. A lot of green on the charts, guys. A lot of green with the Dow Jones, the S&P, and the NASDAQ with 4 green. Yeah, 4 strong buy indications. The DAX 30, the German DAX, again shows 4 green, strong buy, and the FTSE 100, guys, only indicates strong buy on 5 minutes and 15 minutes time frames. The daily remaining a strong sell. So keep an eye on the US indices, guys. They're doing very well today, or so they should, okay, with a lot of big names reporting. Right, this is it from my side today, guys. Join me again tomorrow, same time, same place, for a great round of market talks. And we're going to have a guest tomorrow, if I remember correctly. This is it. Until then, remember to trade responsibly and may all your trades be in the money.